It's a matter of interest, literally a matter of interest, that's moved the Attorney General of the state of Georgia to begin a major investigation into Fleet Finance, the highly profitable subsidiary of Fleet, the 14th largest bank holding company in the country. What the Attorney General may be discovering is something that thousands of unhappy Georgia borrowers have known for a long time, that if you're poor and desperate, there's a very good chance you'll end up at the sign of the friendly sales. You can't miss them, they're everywhere, not just in Georgia, but throughout New England, in 40 states. These sales may be sales of hope for depositors, but in Georgia, where Fleet Finance is based, more than 20,000 borrowers think those sales look more like fins, the fins of loan sharks. Craig Soares has a mortgage with Fleet.
You don't miss a Fleet payment. Everyone will tell you that.
What happens?
Just start packing your boxes. Bottom line, pack your boxes. Everyone will tell you that. Even the brokers will tell you, now I'm getting you this deal, but don't be late.
They didn't want your money, they wanted your house.
They wanted our houses.
Fleet Finance deals in home equity loans, loans in which a house is put up as collateral. The borrower may want the money for repairs or simply to pay off other debts. Fleet's interest rates in neighborhoods like this are way above the going rate because the borrowers are considered high risk, unable to get loans from traditional banks. And yet many of the borrowers have a lot of equity in these homes. Whatever outstanding debt there is quite small. Fleet's position has been described generally as no lose. If the homeowner pays on time, Fleet benefits from the high interest. If he doesn't and Fleet forecloses, Fleet buys the house at the foreclosure sale and resells it, often at a tidy profit.
And I have named them the vulture of the mortgage world.
Craig Soares and his wife were desperate when they got a $78,000 loan at a whopping 20.99% interest. What was the general mortgage rate?
8.5. 8.5.
8.5?
Yeah, prime rate was 8.5.
That was the prime rate. The general mortgage rate was 9.25, compared to the 20.99% Soares was paying.
Is either take this or hit the door.
In fact, in most of its home equity business in Georgia, Fleet itself did not make the original loans. It purchased the loans from other lenders, small companies with names like Mortgage Makers, Tower Financial Services, Georgia Mortgage, and Parkway. It's alleged that these companies existed primarily to service Fleet. Borrowers had no idea when they got the money that within days, or even hours, they'd become clients of Fleet. By the late 80s, Fleet had become the godfather of the secondary mortgage market.
They prey on the emotions, they prey on the desperation, and they prey on the ignorance.
Randolph Wright's is a fairly typical story. This house had been in his family for more than 20 years. He had $37,000 in equity in the house when he got a loan with Fleet at 22% interest. He fell behind and Fleet foreclosed, bought his house, and then sold it at a profit. Randolph lost the house, all of his equity, and now rents from the new owners. Randolph, his two brothers, and his mother have all had problems with Fleet. His brother Willie doesn't think this is a coincidence.
I just think they just target certain people. And I just think we just happen to be of all the same kind of people that they primarily target.
Homeowners, lots of equity, black.
Right. And that had been turned down from a bank.
And getting turned down at a traditional bank opens the door for Fleet.
These people are sitting ducks for Fleet. Fleet fills the vacuum.
Bill Brennan, a legal aid lawyer in Atlanta, holds a workshop once a month for prospective home buyers.
We allege that they are engaging in a criminal conspiracy to take houses away from people.
Brennan represents a group of homeowners who allege in lawsuits that Fleet not only violates state laws against usury, but through a network of other companies controlled by Fleet, set up what amounts to a loan shark racket. Those allegations are repeated in other suits against Fleet, plus charges of inflated lawyers' fees and closing fees.
These mortgages that these companies get are immediately sold to Fleet. All or most of them are. In some cases, 99% with one company.
The process begins with so-called bird dogs, men like Charles Hastings.
I'm not a salaried person. I get up every day and go out and find business.
He's one of a group of unregulated brokers who advertise in and cruise black neighborhoods trying to convince homeowners to borrow money. They work on commission for the small-time lenders who ultimately sell loans to Fleet.
What I'm suggesting is that these local mortgage companies and brokers are Fleet's employees. Those local mortgage companies are simply pass-through companies. The mortgages come through them to Fleet.
We deny the allegations and the lawsuits that have been filed against Fleet.
Terry Franzine is a staff attorney for Fleet Finance. Isn't this another language called deniability, when you have this shell company out there whose existence basically is to service you with loans?
Not at all. The companies from whom we bought loans are independent companies that, I mean, Fleet has absolutely no control over them.
Oh, you have enormous control over them.
I don't think so.
Well, if you don't like the way they work, you won't buy from them.
That's very true. That's very true.
That's the ultimate control.
That's true.
Total control over a company like Georgia Mortgage, for example. Mark Siegel, the owner, says Fleet told him precisely how to run his business. And what percentage of his loans went to Fleet?
100%.
Purely and simply 100%.
100%. Probably toward the end of 1984 until maybe 1989 or 90, I'm not sure which.
He says he sold Fleet over $12 million worth of loans every year for 7 years. And for each one, he got a stamp of approval from Fleet before the loan was made. Pre-approval, it's called.
They would look at the cover letter, see what the loan was all about, look at the application, see what the guy, maybe how long he lived in the house, what he did for a living, self-employed or worked for somebody. And they look at the credit and then approve it either the way we wrote it up or they modify it.
Attorney Roy Barnes also represents minority homeowners suing Fleet.
This is so egregious, so wrong, that everybody tries to create this barrier, said, my hands are not dirty. Well, you can't be in this business, and you can't look at these loans and say that Fleet's not responsible. They had to know what was going on. They had the profits, they had the pre-approval, they had the connections, and they knew that the yields were great.
Denise Wright, a loan officer at Georgia Mortgage, took her loans to Fleet for pre-approval almost every day. Did they care much about the person's credit, about the person's cash flow?
I mean, I had them approved with negative cash flow. They wrote on there, negative cash flow.
Approved.
Approved. No
No-lose
brainer.
situation.
Yeah.
Because if the person fails to pay off,
You take the house. Simple as that.
60 Minutes and the Atlanta Legal Aid Society made a study of the lending practices of Fleet Finance in DeKalb and Fulton counties. An examination of 11,000 loans for the last 10 years showed Fleet's foreclosure rate was 8.5%, more than 11 times the national rate.
What's the difference in this than having a loan shark? And it's just as wrong now, if it's done in this way, as it was done on a street corner in the newsstand when you had a loan shark loaning money.
Just hours before we were scheduled to interview Fleet, the company announced a radical change in policy. From now on, Fleet would make their own loans and would no longer buy them from other lenders. Fleet also initiated a $40 million program to help some of their customers by reducing interest rates, points, and fees on what the company calls troublesome loans. Isn't that an admission that you were doing something wrong up till a few hours ago?
No, not at all. 5 years ago, our senior management looked at the loans that we were purchasing and saw some things that were not illegal but were troublesome.
Well, what do you mean by troublesome?
For instance, the number of points which some of the lenders were charging.
What sort of numbers do you mean that troubled Fleet?
10 points, 15 points.
Not 18 or 30?
Well, I haven't seen any that are 30.
Then they must have missed the 31.5 points Raymond Bryant paid for his loan. He borrowed $11,400, but had to pay back $3,500 in various finance fees. At the end of his 15-year loan, he would have paid more than $47,000 on the $11,400 he actually got. It's loans like this that Fleet might consider troublesome.
Those customers who feel that they have been harmed in some way by a loan which another lender made, Fleet is willing to rectify those harms and make sure that that customer is happy.
But remember, all those loans by, quote, other lenders, unquote, were approved in advance by Fleet. You must feel that Fleet, this wonderfully sophisticated, rich company, was terribly gullible in dealing with these vicious, mean-spirited, original lenders. I mean, you don't give away $40 million because you like the community, do you?
Well, that's exactly what we're doing. You know, because we have had complaints in the last year from customers.
How many?
Oh, gosh. Not many.
Not many?
I don't know.
What Fleet Finance does know is that there are more than 20,000 plaintiffs taking part in 2 class action suits against Fleet. Lawyers handling the cases aren't impressed with Fleet's offer. They say $40 million is a mere drop in the bucket compared to what homeowners might get if they win in court, which could cost Fleet between $500 million and $1 billion.
Hear ye, State of Georgia, County of Fulton.
Georgia is one of the few states where all it takes to foreclose on a home is a certified letter and an announcement in the newspaper. And after that, the first Tuesday of every month in every county in Georgia, the courthouse steps become the stage for this bureaucratic theater of misery. Properties auctioned to the highest bidder.
The debtor's name is Raymond Bryant, and again, the lender is Fleet Finance, Inc. of Georgia.
Foreclosure is what Raymond Bryant feared most, and it's precisely what he got.
I did everything but get on my knees.
What'd they say?
They said that they couldn't give me no more chances or no more time.
It's not uncommon for Fleet to foreclose on a house, then buy it on the courthouse steps for much less than it's worth. The borrower not only loses his house, but under Georgia law, he can end up losing whatever equity he had in it. That's what happened to Willie Wright. When he started with Fleet, he had at least $20,000 worth of equity in his home. When he was finished with Fleet, he'd lost the house and the equity. If you were describing this business not in the arcane language of the law, but in street language, what would you call it?
Well, I don't know what y'all call it up north, but down here in the South, we call it cheating and swindling. It's a type of bondage that is taking advantage of the most helpless, the ones that have the least ability to fight back.
So far, this is where the fight stands. Fleet won round 1 when a federal court ruled that their interest rates were not excessive. In round 2, a state court ruled that Fleet's interest rates were excessive. The case is proceeding to trial.